This is Pre-Market Prep. I'm Brianna Valesky with my co-host Joel Elkanah, and we're joined by Cate Long this morning. She's a municipal bonds expert and the founder of Puerto Rico Clearinghouse. Cate, thank you for joining us today.
Thanks, Brianna. Good to be with you guys.
Absolutely. It's great to have you back. Well, we've talked about Puerto Rico almost every time you've been on the show, and that's because they are in a really bad situation right now. Can you kind of give us an update on what's going on with the debt crisis in Puerto Rico?
Right. So, for the most part, Puerto Rico has been paying their debt, except for one class of what we call public finance corporation debt, and they defaulted on a $58 million payment on August 1st. And so far have not been sued, although there's been some correspondence back and forth. Basically, they raised the tax rate, the sales tax rate on August 1 and have been collecting, or July 1, they've been collecting more revenue. They have a big restructuring proposal that they'll be putting out on August 30th, which is how they would like to open negotiations with bondholders on the debt, and then also includes some restructuring things for the government and some labor reforms and welfare reforms and education reforms for the economy.
So when you think about this compared to other distressed debt situations, where does Puerto Rico kind of stand?
So although it's a municipal bond issuer, it is really much more like Ukraine or Greece, like a sovereign restructuring, because there's no, this restructuring work with bondholders is not happening in courts. So really the way you want to think about it is much more like how Greece negotiated with bondholders. And it's really just, sitting down at the table, everybody, and, arguing over what can be paid and what can't be paid. I think they're doing a good job. They're trying to do a good job in starting to get more information out, because historically Puerto Rico has been a terrible issuer in terms of disclosure. Their financial reports have generally been about, 2 years late. So it's really hard for people to have a view, but they're trying to improve that now so people have a little more information.
What should investors be watching out for to just continue to follow what's happening in Puerto Rico?
Yeah, so unless you're knowledgeable about the bond market, you don't want to be buying anything right now. But
Sure.
the two big things are the electric utility has been, PREPA we call it, has been negotiating with bondholders for a year, and they are near hopefully having some kind of agreement how to restructure the debt and restructure the electric utility. That should be done by September 1st, so that's a really key date in the process. And then this overall restructuring plan from the government, which is due August 30th, is also what people need to keep their eyes on. So the end of the month will be really, really big for Puerto Rico.
We'll have to keep an eye out in just a week or so when we hit the end of the month for August. Shifting back to the U.S., we've talked about Illinois a lot on the program. I mean, you've previously mentioned that it has one of the most corrupt governments in the country. What's going on there right now?
Right. So, as we've talked in the past, they have a new Republican governor, Bruce Rauner, who's really getting down in the trenches and fighting hard against the Democratic leadership of the legislature, the state legislature. They still have not enacted a budget. I think they're the only state in the United States which has not done their state budget, which for everyone starts on July 1. So they've done some continuing legislation to keep certain things funded. It's really just, it's a fight. It's really, I think, between Puerto Rico and Illinois, the biggest ideological fights happening where governments need to be downsized, and there's just not ability to collect a lot more tax revenue to support the government infrastructure that's in place. Chicago also has pretty severe problems where they have a government that's too large. They've not collected enough tax revenue. They've sort of patched over a lot of holes with issuing debt, and the school system is in terrible fiscal situation. So we're going to have fights. We're just going to, this whole year probably we're going to have fights. In Chicago, the teachers may strike against the school system, which may or may not be good. We'll see what happens.
What about China? Obviously, we saw a huge drop in the stock market yesterday due to what appeared to be global concerns about what's happening with the slowdown in economic growth in China right now. What's your take on the situation?
Yeah, so China is another situation that really just sustained a lot of growth by issuing debt, both at the
Hmm.
local government level through banks and then through the state-owned enterprises. And so now they have a lot of debt that needs to be serviced, and they want to adjust their currency, and they wanted to devalue their currency some. And they also had a stock market that had risen very rapidly over the last 6 months. So, a confluence of a lot of things. It's hard to know with China whether these were decisions made by the Central Planning Authority, but they've basically just been going through some massive adjustments, both with their currency and a slowdown in their economy, and obviously this equity market collapse or crash. So we'll see. I mean, China is becoming much more powerful in Asia and much more powerful overall. And it's, on a macro level, you kind of have to step back and look at China to see if these are steps that the government wants to take to realign their economy rather than them just losing control. And there's a lot of debate in markets now whether it's a case of, the government actively doing these things or just losing control of the situation. China affects the rest of the world. A lot of Europeans export a lot of products there. It's actually beneficial in many ways to the U.S. because we import products, so their cheaper currency helps us. But it's just big. When these kind of big major things happen, shakes the whole global system.
Yeah, absolutely. And that's a great point. I'm glad you made that too because, when we got all in a fervor over Greece and this stuff is kind of brewing over in China, whereas Greece is a tiny little country, China's got, an enormous amount of GDP and definitely immense global effects based off of what's happening in their country. So what should investors be wary of China or, in any sort of Chinese investments? What does this mean from like a finance perspective?
Yeah, so a lot of people, if they have Chinese investments, I think usually do it through a mutual fund or ETFs. Maybe some directly invest, and those are calls they have to make, individually for the equity space there. But overall, I think if China continues to weaken their currency, it strengthens the U.S. dollar, and so you look at U.S. the Fed looking at interest rate increases. It's very hard for them to do that in the face of a dollar that's very strong, in addition to the U.S. economy seeming to slow some here. So China, the main thing for people's investors is still a very strong economy, but has a lot of structural problems which they're trying to get hold of. And, the other thing that's important, I think, about China is how much, use of raw materials they have: oil, iron ore, coal. As their consumption goes down, it moves massive deflation into commodities. So overall, I mean, I think we just need to think of them as a big sister, and if they consume less, then the whole world's going to consume less.
Are there any other sort of distressed municipal landscape that's showing up on your radar right now, or generally, what's your overall take on the market conditions?
Yeah, I mean, overall, municipals are very strong. They had a really nice rally as the U.S. equity markets tanked because municipals are a very defensive asset class. People like to go there for security. But there are definitely pockets of distress, and we've talked about New Jersey in the past. They just can't seem to get a handle on, reducing the size of the government there. And, these problems are going to continue. As the economy slows, if the U.S. economy slows, it really hits state and local governments because much of their income is sales tax related. So overall, I mean, the big ones are Illinois, Puerto Rico, and then on a lower level, you have New Jersey, Pennsylvania. And then the rest seem to be in pretty decent shape. They're managing their budgets, and when they don't have enough revenue, they're cutting expenses.
Cate, interest rates. I know you alluded to it there a little bit. We have a Fed rate decision coming in September. A lot of deflationary trends there. I mean, see what happened in the market last couple days. I mean, are you taking a September rate hike off the table? December? What are you thinking? Or is the Fed going to try and save some face?
Yeah, I mean, we've talked about this a lot in the past, which is that, I think the Fed makes these decisions and looks at this on a global level, as well as, what's happening internally in the U.S. economy. And central banks around the world are cutting interest rates. So I think it's very hard in the face of that for the Federal Reserve to raise interest rates, especially when there's some slowing and deflationary forces in the U.S. economy. So I don't think September is on the table. December possibly. And I do want to note Bridgewater, which is a big investment manager, was out with a note last night suggesting the Fed go to QE again. So you're starting to hear this on the fringes of the market, where people feel that conditions are such that the Federal Reserve needs to get back in and stimulate the economy with monetary policy as opposed to contracting it.
Yeah, is that Ray Dalio over at Bridgewater that came out with
Yeah.
that? Yeah, I mean, he's not the only one, and especially you look at the deflationary trends. Just a little bit closer to home. I know it's kind of in the rear view mirror, but any thoughts on the Detroit bankruptcy? City seems to be on the rebound here. Actually, Benzinga is going to be moving the world headquarters down there in a couple months. Any any updates on the Detroit bankruptcy?
No, but that is fantastic news, and that's exactly what you want to happen after a city, hits bottom, goes through bankruptcy, and comes back. To hear that, young, upcoming, strong companies want to move there, going to move there. People locating there. That's the key. That's really, that says it all to me, Joe, is that you guys have confidence in the city and its prospects to go there.
Well, everyone
That's
else here
great.
is young. I'm not so young, but no, we're looking forward. We're looking forward to the move down there. Also, just going back, I know Brianna touched on the China situation. Boy, oh boy! I mean, you talk to some people. Well, if China's slowing down and they're going to crash, they're going to be consuming less of our goods, and you're just talking about a global meltdown. And perhaps a stealth bear market. Are we that dependent on China? Is China that dependent on us that's a possible scenario?
No, I think it's important when you think about China too that from what I've seen, they've revised growth rates down from 10% to like 6%. So the economy, the Chinese economy, is still growing, but not at this voracious sort of out of control rate that it has over the last number of years since 2009, essentially. It will dampen economic activity globally. I don't think it'll crash anything. I think the bigger concern is what China has done and what U.S. moves have done to emerging market currencies. I mean, you see on the currency front, all these countries devaluing currency, their currencies getting whacked, and that is also very deflationary on a global level. So you have oil as a deflationary force, you have commodities, you have currencies. So overall, I mean, China's a big an emerging economy, a big, pivot for the global economy, but it's not going to implode the whole show.
Okay, all right, and just any final comments on the U.S. markets, the bond markets. I mean, we've touched on interest rates. You think any other municipalities that you mentioned New Jersey, Chicago, or Illinois? Any other municipalities? I know California's having a lot of problems with the water situation. Any other
Right.
municipalities that you think that just investors should keep an eye on?
Yeah, no, I think that's the big one. The other one's Kentucky, which is going to probably end up being as a headline state like Illinois and New Jersey is, because they've just massively underfunded their pensions. And they're going to need to do something about it. Some teachers filed a federal lawsuit against the state yesterday, suing over the pension fund. And that kind of stuff's going to accelerate. And again, I think to my thesis that where you have a lot of corruption in the political realm, you tend to see really, severe or growing debt problems because it's easy just to mask over a lot of fiscal issues by issuing debt. So,
And also, I
Keep
just
your eye
want
on corrupt places.
always a good place. I also just wanted to talk to you about. I mean, obviously, yesterday morning, we were all glued on the equities and the stock index futures. When that kind of chaos. I mean, what do you look at in that? I mean, do you look at the actual some of the closed-end muni bonds funds, how they trade? What do you keep an eye on? In those kind of crazy situations.
Well, basically, you look at the 10-year Treasury.
Mm-hmm.
That's kind of the bellwether for the whole market, and typically moves contra to the equity market. As people leaving, fleeing equities, they're buying Treasuries. So just overall, because it's also very liquid, it tells you on a more spot-to-spot basis how the markets look. Munis overall don't trade that actively, so there's not as much a real-time response or indicator available. The MUB, the ETF is somewhat liquid and it trades, but again, there's distortions in that pricing because the underlying is not traded that often. So, basically you look at the 10-year or the 30-year Treasury. We
Okay.
also have AAA muni yield muni curves that we look at.
Okay, the MUB. I mean, it took a little. I mean, it doesn't move a whole lot. It did take a little bit of a haircut yesterday, but it didn't nothing like you saw in in some of the stocks or issues. Looks like you had a
hmm
little bit more liquidity though, even though it doesn't trade a whole lot of volume. We've been on the long,
Right.
yeah. So no, that's interesting to keep an eye on. I'm a big fan of munis. Cate Long, muni bound expert and founder of the Puerto Rico Clearinghouse. She joins us every few months to give her take on interest rates and muni bond market. Great to get your perspective, Kate. As always, we'll talk to you again soon.
Thanks, Phil. Thanks, Deanna.
Thanks, Kate.